One of the more challenging parts of running a small business is making sure that you are paid for all of the hard work and the hours that you are pouring into your businesses. And unlike a traditional employee where you're presented with a regular paycheck, determining how to pay yourself as a business owner can be a little more challenging and complex. In today's episode, we're going to be taking a deeper dive into the things to consider when you're trying to decide how and how much to pay yourself as the one who started it all. Let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello, and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be talking about how you actually go about paying yourself as a small business owner. We're going to look at how your business entity or structure plays a part in that, and then also look at how to determine how much you should be paying yourself as the business owner. So first off, let's talk about how do you actually pay yourself as a small business owner, and specifically, we're going to talk about those of you who are set up as a sole proprietor or a single member LLC business first. For tax purposes, these two types, a sole proprietor and a single member LLC, they are treated the exact same for tax purposes. So if your business is one of these entity types, you can simply transfer money from your business bank account to your personal bank account in order to pay yourself. These types of payments are what's known as an owner's draw, and there's no limit to how frequently or how much you pay yourself in this way. When you're doing your bookkeeping, these amounts are simply going to be categorized as an owner's draw, and they're going to be reflected in the equity section of your balance sheet. They do not appear on your income statement. As a sole proprietor or a single member LLC, you are not allowed to deduct or expense the payments that you make to yourself, and therefore they do not show up on your income statement. For your business, you are going to be taxed on the business net income or the bottom line of your income statement. But whether that money actually stays in the business bank account or it's been transferred to your personal account, it does not make a difference. So if you are a single member LLC or sole proprietor, just go ahead and make the transfers to your personal bank account and categorize them as owner's draws. But what happens if you are in business with somebody else and you have formed a partnership? So for this type of business, it's important to understand that there are two different types of payments that are made to partners. First, you have guaranteed payments. And these are going to be payments to the partners that are meant to pay you for your services that you are directly providing to the business. Typically, how these payments are calculated and paid out should be explicitly stated in your partnership agreement. And if it's not, you may want to consider putting something in writing in there that both partners agree on. So, for example, if there are two partners and each of you have 50% ownership in the business, but one partner does most of the work, it's okay that one partner is paid more when it comes to these guaranteed payments, as it should be a direct reflection of the work done in the business. These types of payments are going to be a deductible business expense and therefore should be recorded as an expense in the business's bookkeeping records. So I recommend creating 2 or more different guaranteed payments expense accounts and have one for each partner in the business and put your actual name in the expense category type, so guaranteed payments for partner name. The second type of payments for partners are called partner distributions. These are distributions of profits and need to be taken out of the business in direct proportion to the partner's ownership percentages. And Again, I want you to take a look at your partnership agreement because there may be specific instructions in there on when or how much to take in distributions. But as far as I know, there are no legal limitations, just as long as both partners agree on them. So, for example, let's say that the business had a $10,000 profit in Q1, and the partners want to give themselves a bonus distribution. If they have 50-50 ownership, then you need to make sure that the distributions that both partners take are the same. So if they want to take out all $10,000, each would receive a $5,000 bonus. However, if they have a 75% and 25% ownership, then the 75% owner would need to take out $7,500 and the 25% owner take out $2,500. These types of payments would be recorded as partner distributions, and they're going to be reflected on the business balance sheet, not the income statement. So the final type of business entity or structure to talk about here is how you pay yourself if you are taxed as a corporation, meaning either an S Corp or a C Corp. If you have this type of business, then it is important that you put yourself on an actual payroll. And that means that you have all of the applicable payroll taxes withheld from your paycheck and paid to the specific government agencies, and that your business is matching with the appropriate employer payroll taxes as well. And the frequency at which you pay yourself on payroll isn't necessarily set in stone, but I do want you to take a look at any state labor laws because I do know that some states do require that all employees are paid on at least some type of minimum frequency, and since you would be on payroll, you are considered an employee of your business, so just make sure that you are being compliant with any state employer and labor laws. But to get any of these payroll amounts into your bookkeeping records, you're going to need to make sure that you record both the gross salary and wages for each paycheck, so that's going to be the amounts before any of your employee taxes are withheld. And then you also need to expense the employer taxes, meaning that the portion that your business pays on top of the wages that they pay you. And I always like to specify that just because I have seen quite a few business owners expense the net paycheck amount as the gross wages, and then any of the payroll tax payments as the payroll tax expense. However, that's not entirely accurate. And you may have issues come tax time when your tax accountant is wondering why your payroll and tax amounts on your P&L don't match the payroll reports. Now, if your business is having a successful year and you want to pay yourself over and above whatever your payroll salary is, then by all means, please do so. And these payments can simply be transferred from the business account to your personal account as well. And these are going to be recorded as shareholder distributions. And these are going to be reflected on the balance sheet of your business. Distributions, again, are not going to be reflected on your P&L. But remember that the salary of an S Corp or a C Corp owner is required. So make sure that if you are an S or a C Corp owner, that you are on payroll yourself. And you must pay yourself the payroll amounts before taking any additional distributions out of the business. All right, so we've talked about all of the logistical how do you pay yourself. Now let's get on to probably a little more fun of a topic, and how much do you pay yourself? So anytime I get somebody asking me this, my first question is, well, I don't know, how much can your business afford? And I say that kind of kidding, but in reality, that is one of the things that you need to consider. Another thing that you need to consider is that if you have elected to be taxed as a corporation, either an S or C Corp, then you need to put yourself on payroll and pay yourself what's called a reasonable salary or reasonable compensation. And it may be worth it for you to find an expert that you can hire to conduct what's called a reasonable compensation study, and they're going to tell you what amount that they recommend that you pay yourself. I used to say that a reasonable salary would be what you would have to pay someone to come in and do all the things that you do. I also used to recommend, Googling an average salary of a store owner in whatever city you're located in. But recently, I've actually learned that by calculating your salary that way, you may end up paying yourself more than you need to in wages, which could be costing you more in payroll taxes and income taxes. So there's definitely a delicate balance of paying yourself enough to be considered reasonable compensation, but not to pay yourself too much so you're not able to take advantage of the biggest tax benefit that the S-Corp election can give you. So I'm not going to get too much into the weeds here, but if you are curious at what a reasonable compensation would look like for you, I highly recommend that you find someone that can conduct a reasonable compensation study for you, and they'll be able to tell you what amounts you should put yourself on payroll for. If you are a partnership, make sure that you are referring to your partnership agreement to determine what amounts each partner needs to be paid for their guaranteed payments. And if nothing is currently documented, just make sure that you and your partner sit down to come to an agreement together and to add that into your agreement so there's no confusion or disagreements later on. And if you're considering how much to take in owner's draws or distributions, then there's a couple different ways that you can go about it. And this goes for any business entity type. So I am a huge fan of using the profit first method. It's based on a book by Mike Michalowicz in which he lays out a process of cash management using multiple different bank accounts. And I'm not going to go super in depth on that method here, but in short, what he recommends that you do is transfer a predetermined percentage of every dollar that comes into your bank account on a regular schedule. So for example, let's say in 1 week, you get $1,000 deposited into what's called your income account. On the following Monday, say that your predetermined percentage is 5%. You're going to take 5% of that $1,000 and transfer it immediately into your personal bank account. So that's the gist of the profit first method. I'm actually planning on doing a podcast episode in a couple weeks that goes a little more in depth on the profit first method. So make sure you come back and check that out if you're interested in learning more. Otherwise, I will link to his book below in the show notes as well. Highly recommend you read through it because it is a great resource in helping you manage the cash flow in your business. Another method that you can consider is just scheduling a certain flat dollar amount to be automatically transferred from your business account to your personal account on whatever frequency you deem appropriate. So this method may be more beneficial if your business is your only source of income and you know what amount that you need to live on personally each month, as there's going to be less variance when you use this method of a flat rate amount each week or every other week versus using the percentage rate that the profit first method utilizes. So each method kind of has their pros and cons, but I recommend that you just pick one of the methods, try it out, and you can always switch methods later on. Nothing is going to be set in stone. The most important thing is that you just do it. There are far too many business owners out there that don't pay themselves for their hard work, and they make excuses and say, well, I'll do it when XYZ. Maybe when I start getting a $10,000 month, or maybe once I'm finally profitable, then I'll finally start paying myself. And you just keep kicking the can down the road. Unfortunately, I've seen it way too often where they keep saying these things and that day just doesn't come because they start making more, but then they have more expenses and they never prioritize paying themselves. So I want you to draw a line in the sand and make it happen today. Even if it's $1 a month or $1 a week, just start with something small and make a commitment to every month or every quarter, increasing that little by little to start paying yourself for your hard work and your time and to start making this business worth it. And remember, in order to know what your business can actually afford, you first need to make sure that you have accurate and up-to-date bookkeeping so you can see the numbers in black and white in front of you. So often business owners go based on emotion and they don't think that they can afford to pay themselves, or they think that they can afford to pay themselves this much, but when they actually look at the numbers, it tells a totally different story. So start by paying yourself even something small, and then make sure that you are referring to your bookkeeping records to make sure that the amounts that you are paying yourself can be sustained over time. And if you find yourself needing some additional guidance on getting your bookkeeping cleaned up, I will link to some additional resources below that can hopefully help give you some guidance. But if you have not been consistently paying yourself from your business, really want to encourage you to stop working for free and start paying yourself something, even if it's just $1 or 1% of every dollar you earn. But that's all that I have for you today. Be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.